So, if the power grid goes down for a single hour at like a hyperscale AI data center, it doesn't just cost them millions of dollars in lost uptime.
Right. It's way worse than that.
Yeah. I mean, it fundamentally breaks the training of language models that are worth literally billions. Or picture yourself managing this massive remote copper mine high up in the Andes. Everything is humming along, right? You're extracting vital minerals for the global economy, and suddenly darkness.
Yeah, absolute nightmare scenario.
Exactly. And in heavy industry, you don't just flip a switch to turn massive smelting equipment back on. Restarting those operations after a blackout is, well, it's a logistical and safety nightmare. Heavy industry is basically currently held hostage by a fragile public grid.
It really is.
But for today's deep dive, our mission is to look at a climate tech startup. They're called Energetik Heart, and they claim to have completely severed that reliance.
And that hostage situation you just mentioned, that is precisely why we aren't just going to look at their technology today. We are going to analyze this company exactly as a venture capital investor would.
Okay, I like that angle.
Because, the most successful VCs don't deploy capital just because a gadget is clever or green.
Really?
They invest in operational resilience. They look for elegant, highly scalable solutions to these really expensive, deeply entrenched structural problems.
Yeah, the stuff that actually keeps CEOs up at night.
Exactly. So we have their internal documents, their pitch decks, financial projections, and we're going to evaluate their entire thesis. The problem, their very unique solution, their traction, and the scalability of their business model.
Okay, let's unpack this. Because the obvious pushback you always hear when discussing the carbon footprint and, the volatility of the public power grid is, well, just put up solar panels.
Right, the classic response.
Yeah, like build a wind farm.
Yeah.
But looking at these industry requirements, that standard green tech answer completely ignores the reality of how these mega facilities actually operate.
It falls flat entirely. I mean, the fundamental flaw of solar and wind for heavy industry is intermittency.
Because the sun sets.
The sun inevitably sets, the wind inevitably stops, and you cannot pause a copper smelter or an AI server farm to wait for a breezy Tuesday.
Yeah, sorry ChatGPT is down, no wind today.
Exactly. These operations require what the energy sector calls firm power, which means 24/7 continuous, reliable baseload electricity.
Right.
And they currently get that either from the public grid, which is expensive and prone to bottlenecks, or by burning thousands of gallons of diesel in massive dirty generators.
Which brings us to the solution proposed by Energetik Heart. They call it a portable river, which is honestly a brilliant piece of marketing.
It really is. Very evocative.
Yeah. And from what I'm reading in these schematics, it is a closed loop behind-the-meter micro hydroelectric power plant that they just, drop directly into the client's backyard.
Right, and behind the meter being the operative phrase for an investor here.
Because they aren't dealing with the utility company at all.
Precisely. That means the power is generated directly on the client site, bypassing the public utility infrastructure entirely. You are no longer reliant on vulnerable transmission lines.
You just bypass grid congestion altogether.
Yeah, and you are immune to utility blackouts. You create this autonomous private ecosystem of firm, continuous power.
Wait, hold on. I have to push back here for a second because this is where my brain just hits a wall reading their technical claims.
Oh, I know where this is going.
I mean, it's a hydro plant, but without a river. It uses a closed loop of water, and they use electric pumps to circulate that water. Doesn't the pump use more energy than the turbine actually generates?
Yeah, the perpetual motion question.
Right. I mean, you can't invent a perpetual motion machine. How does the physics of this actually pencil out to create a net positive energy output?
It is the very first thing any technically minded VC or engineer is going to scrutinize, believe me. And no, they are not breaking the laws of thermodynamics.
I couldn't.
And they definitely aren't claiming perpetual motion. They are utilizing advanced hydropneumatic technology. They leverage physical principles like Archimedes' principle, Pascal's law, and a fluid dynamics phenomenon known as the water hammer effect.
Or in Spanish, golpe de riete.
Yes, exactly.
I know the water hammer effect. Like, if you've ever lived in an older building and turned off a faucet really aggressively, you hear that violent, loud bang rattling the pipes in the wall.
That's the one.
That's the kinetic energy of the moving water suddenly slamming into a closed valve, right?
That is the water hammer. And normally, in civic plumbing or industrial engineering, that pressure spike is a destructive force.
Right. You spend millions trying to mitigate it so your pipes don't explode.
Exactly. But Energetik Heart's engineering marvel is that they intentionally induce, capture, and control that high-pressure shockwave.
But break that down for me, because you just threw Pascal and Archimedes at me. I get the loud bang in the pipes, but you still haven't explained how that creates more electrical power than the pump uses to start it.
Okay, think of it like an amplifier. The input electrical energy isn't doing the heavy lifting of spinning the turbine directly.
Sure.
The input energy simply runs a circulation pump that moves water into a sealed, pressurized hydropneumatic chamber, and that takes relatively little
And
electricity.
it uses the standard pump.
But then, by rapidly closing a specialized valve, they trigger that water hammer. That kinetic energy converts into a massive instantaneous pressure spike.
Oh. And because it's in a sealed tank, this is where Pascal's law comes in,
Yes.
because the pressure distributes equally everywhere inside the tank.
Yep, you've got it. That shockwave compresses the air inside the pneumatic chamber. And that compressed air then acts like a massively powerful coiled spring pushing back down on the water with immense sustained force.
Wow.
It creates a continuous, highly pressurized jet of water that is then directed over a high-efficiency turbine. So the pump is just the trigger.
So it's the mechanical leverage that does the real work.
Exactly. The mechanical leverage created by gravity, buoyancy, and extreme pressure differentials is what provides the high torque to spin the turbine. They're literally harvesting the physical forces of fluid dynamics.
So the electrical input just sets the stage, but the mechanical pressure does the actual work. That actually makes a lot of sense.
It's brilliant engineering.
And reading their ESG, their environmental, social, and governance goals, the crucial element here is that it operates with zero net water consumption.
Which is huge.
Yeah, it uses water to create that loop, but it just recirculates it infinitely. So for a massive mining operation in, say, a drought-prone region of Latin America, you get 24/7 firm power, zero emissions, and you aren't draining a single drop from the local water table.
Which is an incredibly powerful narrative for corporate sustainability goals. But, you know, a brilliant physics application in a lab doesn't automatically make a sound VC investment.
No, of course not. You need a business case.
Right. If we are evaluating this as a business, we have to look at the monetization.
And here's where it gets really interesting to me.
Mm-hmm.
Because if I'm a mine manager, I might love the green tech, but I am not going to spend $20 million up front on an unproven closed-loop hydro plant.
Absolutely not. The risk is too high.
And Energetik Heart knows this. So they use a business model called Energy as a Service, or ESA. Let me use an analogy here because this model is fascinating.
Go for it.
Think about the aerospace industry. Decades ago, Rolls-Royce realized airlines didn't actually want to buy massive, expensive jet engines. They just wanted the thrust to fly planes.
Right. The outcome, not the hardware.
Exactly. So Rolls-Royce introduced power by the hour. The airline doesn't buy the engine. They just pay a subscription fee for the hours it operates. Energetik Heart is doing the exact same thing for industrial electricity.
It's a fantastic comparison.
They aren't selling the client a power plant. The parent company, Steeler Energy, finances, designs, builds, and maintains the plant on the client site for free.
Yep. Zero CAPEX.
Zero capital expenditure from the client. The client just signs an agreement to buy the electricity it generates at a massive discount.
And the technical term for that is a power purchase agreement, or a PPA. And these aren't short-term contracts.
No, we're talking decades, right?
Exactly. They lock in these PPAs for 15 to 25 years. So for the client, it's a no-brainer. You convert an unpredictable inflationary operational cost to the public grid into a predictable, highly discounted asset.
And what's the actual discount?
Energetik Heart guarantees a 40 to 50% savings compared to what these facilities are currently paying.
That is insane. When you look at the traditional competitors, this proposition completely leaves them in the dust.
Oh, completely.
I mean, you have large electrical distributors like NLX who are fundamentally tied to the expensive, volatile grid infrastructure.
Right.
Or you have companies like Aggreko that provide those massive diesel generators, which are reliable, sure, but incredibly dirty and expensive to fuel.
And terrible for those ESG goals we talked about.
Yeah. So Energetik Heart walks into a pitch and says, look, we are 50% cheaper than the grid, cleaner than diesel, and we require $0 from your capital budget.
And from the venture capital side of the table, this model is the holy grail. VCs want predictable, long-term recurring revenue.
Because it's a subscription, basically?
Exactly. And because Energetic Heart owns the infrastructure, and because the fuel is literally just recirculating water, the operating costs are incredibly low.
What do their margins look like?
Their projected gross margins hover around 80 to 85%.
85%.
Yeah. Once the initial construction cost is paid off in the first few years, every single megawatt hour produced for the next 2 decades is almost pure profit.
Okay, so the margins are incredible, the physics are sound.
Hmm.
But if I'm a VC, I'm notoriously allergic to technical risk.
As you should be.
Right. Promising an 80% margin on the 25-year subscription is fantastic, but an investor is going to look at this and say, is this just a fancy 3D rendering on a pitch deck, or does this thing actually work outside of a computer simulation?
Right. This is the show me, don't tell me phase of the pitch. An Energetic Heart presents a deeply compelling case for de-risking the technology. Their system is currently validated at Technology Readiness Level 6, or TRL6.
Meaning they've successfully built, tested, and are currently operating a physical 20-kilowatt laboratory pilot.
Right. But it's the funding of that pilot that provides the real institutional validation here.
Oh, interesting.
This wasn't just built in a garage with friends and family's money. This pilot was audited, certified, and co-funded by a highly competitive government grant program called Innovate Peru.
Ah, okay. If you've ever looked at government innovation grants, especially in Latin America, you know the due diligence is grueling.
It is brutal.
Yeah, so having Innovate Peru co-fund this serves as a massive green flag for a VC. It means independent institutional engineers have already looked under the hood, verified the fluid dynamics, and deemed it viable enough for state funding.
And they have translated that technical validation into serious commercial traction. I mean, they aren't just cold calling hoping for a meeting.
No, numbers here are huge.
Their internal documents outline a commercial pipeline of 39 identified clients, representing a total energy demand of 796 megawatts.
Which they value at a pipeline of over $500 million.
Yeah.
And we aren't just talking about soft interest either. They have 5 signed NDAs, non-disclosure agreements, with top-tier, heavy-hitting mining companies. Names like Buenaventura and Nexa.
And these are massive, sophisticated corporations. They do not dedicate legal and engineering resources to sign NDAs unless they are actively planning a deployment.
Which brings us to the actual ask of the pitch.
Yeah.
Because they are raising a $1.5 million seed round right now.
Yes.
And the objective is to scale up from that 20-kilowatt lab pilot and build the first 1-megawatt industrial pilot directly on one of those client sites.
And there is a specific detail in their financial structure that VCs dream of finding at the seed stage.
Oh, the clean cap table.
Capitalization table, exactly.
Yeah, if you've ever watched a startup documentary or followed tech news, you know how messy a cap table can get.
So messy.
Founders often sell off huge chunks of their equity to predatory early investors just to keep the lights on. But because Energetic Heart relied on state grants from ProInnovate and the historical revenue of their parent company, Steeler Energy, the founders still own the pie.
Exactly. For a regional or global VC coming in at the seed round, a clean cap table means there is maximum upside potential without having to untangle a web of early stakeholders.
It's a huge selling point. But looking at this 1-megawatt goal, my first thought as an investor is that scaling this up is going to be an engineering nightmare.
Why is that?
Well, going from a 20-kilowatt lab pilot to a massive industrial plant powering a copper mine, how do they prove the machine won't just tear itself apart under the immense pressure when they make it 50 times bigger?
See, this is perhaps the strongest part of their entire business strategy. They don't actually build a bigger machine.
Wait, what do you mean?
They completely neutralize that manufacturing and execution risk through strategic alliances and modularity.
Oh, right. Reading through the background of the team, this isn't a group of software developers trying to figure out heavy industry.
No.
CEO Eduardo Tiravanti and the parent company, Steeler Energy, have a very profitable 20-year track record servicing the industrial energy sector. They already know how these massive clients operate.
And because of Steeler Energy's deep industry roots, they are members of the AHK, the Peruvian German Chamber of Commerce.
Okay.
And that membership facilitated a partnership that completely changes the risk profile of this investment. They formed a strategic alliance with the Ossberger Group.
The Ossberger Group, that's a 150-year-old German engineering titan. They literally invented the cross-flow turbine.
They are the absolute gold standard in global hydroengineering. So to answer your question about the fear of scaling Energetic Heart, isn't taking a 20-kilowatt machine and trying to invent a custom 1-megawatt behemoth from scratch.
Okay, so what are they doing?
The core generation unit of the portable river is an Ossberger module that produces 0.20 megawatts. That specific module is already perfected, globally standardized, and has been proven in the field over decades.
Oh, wow. So to build a 1-megawatt plant, they just do an arithmetic sum. They literally just stack 5 of those pre-proven 0.20 megawatt Ossberger modules together in parallel.
Yes.
It's industrial Lego.
Exactly. They transfer the most terrifying part of the business for a hardware investor, the mechanical failure risk, to a global German leader.
This is so smart.
And because the cross-flow turbine design is so refined, the entire generation unit possesses incredible mechanical simplicity. We are talking about only 3 total moving parts in the core system.
3 moving parts. That is wild for an industrial power plant.
It really is.
I mean, fewer moving parts means a drastically lower probability of breakdown. It means minimal maintenance costs, which fiercely protects that 80% gross margin we talked about earlier.
Absolutely. It results in a hardware lifespan of 40 to 60 years.
Wow.
Think about the unit economics of that. If your power purchase agreements guarantee revenue for 25 years, but your equipment is certified by German engineers to last for 60 years, the long-term profitability is staggering.
So let me just summarize the checklist here. The tech is proven at TRL-6. The team has decades of experience. The manufacturing risk is completely mitigated by Ossberger. The final piece of the pitch is the TAM, the total addressable market. Because VCs want to know, how big can this actually get?
Well, the energy as a service model is inherently hyperscalable, and electricity is a universal bottleneck. They note a global total addressable market of $175 billion.
Billy with a B.
Yes. And they are smartly focusing their initial beachhead strategy on Latin American mining and heavy industry, because that's where Stellar's network and those 39 clients are located.
But the pitch deck highlights that their ultimate global expansion relies on 2 of the most explosive sectors in the modern economy, right? Green hydrogen, known as H2V, and AI data centers.
Yeah, and if you look at the fundamental constraints of both green hydrogen and artificial intelligence, they desperately require exactly what Energetik Heart provides.
Because they both need firm power.
Exactly. To produce green hydrogen economically, you need massive electrolyzers running continuously. You cannot run an efficient green hydrogen plant on intermittent solar power. And to run hyperscale AI server farms, you need immense amounts of cooling and processing power 24/7.
It is genuinely amazing when you look at the timing of this technology. Right now, AI data centers are draining public grids worldwide.
It's a huge crisis.
We are seeing headlines every single week about tech giants scrambling to find enough power to train their next generation models. They are hitting a physical bottleneck because they literally cannot wait 5 to 10 years for public utilities to permit and build new high-voltage transmission lines.
Yeah, they're desperate.
I mean, tech CEOs are trying to restart dormant nuclear plants just to get firm power. If Energetik Heart can offer them a behind-the-meter, zero-emission portable river that can be installed in a fraction of the time, it shifts from being a cool alternative to a mandatory piece of global infrastructure.
It completely elevates the narrative of the company. They're positioning themselves not just as a cost-saving measure for remote mines, but as an indispensable partner in the global value chain of the net zero economy.
That's a great way to put it.
They are providing the foundational, decentralized power layer required for the future of technology.
It really is a masterclass in how to structure a business case. So what does this all mean for you, the listener? Energetik Heart is offering a completely de-risked, highly scalable, zero CAPEX solution to the world's most urgent industrial energy bottleneck.
Right.
They are leveraging proven hydropneumatic physics backed by a century of German engineering to provide firm, 24/7 clean power, all wrapped up in a highly profitable subscription model.
It checks every single box a sophisticated investor is looking for. A validated solution to a critical problem, a massive addressable market, and financial mechanics that guarantee long-term high action returns.
But, going through all of this, looking at the massive market potential, the modularity, and the way these massive industrial giants and AI data centers can just snap together these modules and create their own perfect private power grids.
Yeah.
This raises an important question for all of us outside of the VC boardroom. Something for you to think about next time you pay your electric bill.
What's the ripple effect?
Exactly. Think about the public grid. The massive network of wires, transformers, and power plants that connects our homes and hospitals.
Mm-hmm.
The economics of that public grid rely almost entirely on massive industrial consumers. The mines, the factories, the data centers, they are the anchor tenants. They pay the lion's share of the utility bills, and that revenue subsidizes the maintenance of the infrastructure for the rest of us.
They fund the system.
So if this modular energy-as-a-service technology becomes the global standard, if the world's biggest industrial players and hyperscale data centers realize they can save 50% and achieve zero emissions by completely unplugging from the public grid to use their own private portable rivers.
What happens to the public utilities?
Exactly. If the biggest, wealthiest paying customers simply vanish behind their own meters, who is going to be left to pay to maintain the public grid for the rest of us?